Good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for June 3rd, 2024. I'll get the daily reports posted later tonight. I'm having trouble printing. We're going to jump straight to the sniper trade of the day. We're looking at 10-minute chart, EWW, Mexico. Here's Friday's close. Here's the big gap down. This is the opening range 10-minute. It opened here, went as high as here, as low as here, and then closed back here. In the second 10-minute bar, it opened here and started to fail right away. So we got short. I'm using an R5 initial risk box in that, which in Mexico is about 30 cents. And that consists of two R10 boxes. Now on the 3-minute bars, we would normally use a 15 cent risk box. But because I'm on the 10s, I'm using the wider risk box, and I combine those into an R10. And that's 30 cents. Check or hold? It drops like a stone. And it drops down to here. And then opens in the next bar. So already in the first 10 minutes, we're looking at 2R right off the bat. Good problem to have. It reverses again, continuing to sell off. This is like about 5R. Now, notice that after the R10 reverses, it never hits the lower skin of the dragon. So we're still in that position by rule. Near the end of the day, it breaks through and hits the PSAR stop. So I take that exit for the whole position. So if we're scoring this, that first position short with one risk box scores 1, 2, 3, 4, 5, 6, 7R. Second position scores 1, 2 for 2R. So that works out to about 9R. Sniper trade of the day on 10-minute charts on our primary target, EWW. What are your questions?
When do you change from a 3-minute OR3 to the 10? And what was the impetus for that?
Just a minute. Let me put my ears on. Question?
So when do you decide to use an OR3?
If I'm trading on a 3-minute bars with a big gap.
Okay, but what was the impetus to use a 10-minute chart here?
I've just changed my mind and started to look at 10 minutes because it's slower and easier for more people. And 10 minutes is also an intraday tradable move. This trade also looks really good. If we go to the 3-minute and you look for an OR3, here's your OR3. Here's the breakdown. It never looks back. So that trade works on an OR3 as well. You get in a little bit better. You get a slightly better entry. Either one's tradable.
Got it. Okay.
It actually looks pretty good on the 30-minute bar too, but it was just that kind of a move today. But in the world of trying to get multiple symbols working, the more that you look at like just one symbol the more you're probably emphasizing the 3-minute. The more you're trying to get like 5 to 10 symbols, the more you look at the 30-minute continuum, because you need the extra time to be able to evaluate multiple targets. If you're looking at like the 2 to 4 or 2 to 5 symbols, the 10-minute is probably a good trade-off. On a 10-minute bar, if it's working, you can fine tune it by dropping down to the 3-minute, or if it's really working good and it's just kind of slow and steady, you could maybe relax it to a 30-minute and manage it that way. But if we're just using one symbol, for example, EWW, and now you want to add a second symbol, DIA, and then you want to add some other ones like XLI, XLF, XLE, the sector spiders for industrials, finance, and energy. Why would you do that? Well, because you can get some directional moves on these large, liquid, volatile indexes that give you truer signals and bigger moves than the blended return that you get from DIA. And this gives you a nice triumvirate of US sectors that move separately from, say, Mexico and Brazil. So for guys that don't want to specialize in just a simple single symbol, try saying that at 9 o'clock at night. simple signal. Yeah.
But on the 3-minute chart there, would you not have gotten out with the RL10 hooks up? I mean, you got a PSAR flip.
Oh, sure.
There.
Yeah. So
Which I-
so in the discipline, if we looked at this with the 3-minute discipline, on this chart, it looks like your trade is probably short here, right?
Right.
With a 15-cent stop. And then this thing runs down, and here's your first alert that the RL10 is slowing down. And you probably get out here, which means that you probably cash about 3R. And then you re-enter probably here, and you get this one and exit here. So you get another 2. So by this point, at 45 minutes into the day, you're probably holding 5R already. And maybe you're done. Yeah. And then you still get all of this. But the advantage of the 10-minute is that you're now, let's see, where is it? Yeah, on your 10-minute chart, instead of multiple entries and re-entries, you can sort of take advantage of the general mobility of the herd moving in that direction, and you can kind of ease into that trade that produces 9R. But on the 3-minute bar, you probably made 5R between this move and that move. So you're already +5 on the 3 minutes right here, and you got the rest of the day to do whatever you want. But then on the 3-minute, you're probably also getting a re-entry here, and that's where you get that long slide. But as you start going out to the longer time frames, the movement of the herd when it's directional, just managed by the PSAR or the spine of the dragon, gives you a satisfying, easy to manage exit. But again, that's appropriate, if you're thinking anywhere between, it really has to get to your span of control. The way you're trading, Jay, and you're wanting to maximize SPX, the shorter time frame is going to work better for you, because you'll get a lot more out of that move than a 10-minute chart that is just following the herd. On the other hand, guys that want to spend less time per management decision, the 10-minute chart looks like a good trade-off. We'll see how that shapes out for some of the other guys that we're working today. So, George, working the 3-minute chart with Bitcoin gets chopped up quite a bit. There was not much movement on that today. So the chop gets him. But the 10-minute chart on Mexico in the first hour of the day overcomes all of that. Now, he doesn't wait for the return to the dragon, because he gets this move and then he takes the 1, 2, 3 exit and cashes 2.2 for a positive day. That overcame the drag of the Bitcoin trade. So in this case, the 10-minute chart gives him a manageable trade that makes him positive for the day. That turns out to be manageable for him. Hamad is using 10-minute trades on DIA here. Gets this one, gets the re-entry, doesn't get the second re-entry, but still clears 1.8 on a 10-minute chart. And that slower time frame allows him to also play EWW for 1.6. And again, that's not even optimizing for the day. I mean, he gets this one and this one for 1.6, and that's not even taking the majority position on the full day, but he gets 2.3, and that's 1.6 out of the whole shebang. So he's able to trade multiple symbols on the slightly slower time frame. Yeah, oh, sorry, that was twice. And then gets 1.3 on EWZ, and this is one where he actually is able to trade that in 2 directions, and he gets 1.3. So he's over +5 for the day, but he's able to do that on 3 symbols on a 10-minute charts. The slower time frame gives him more flexibility to trade more symbols. I'm sorry, there's another one here. This is Jonathan. This is on this is DIA on the 3-minute bars. So this is DIA 3-minute. And he was working EWW. This is a case where by working the shorter time frame, his focus on EWW didn't allow him to see that one. But when he stood back in a little bit, he was able to get the SFC. And on the 3-minute, was able to get, here's the reversal, and he takes the skin of the dragon, and he gets 2.88. And also 2.7 on EWW here. Again, he's working the 3-minute on this. So it was a big gap. So he's ready to play that right away. He gets this trade. And again, the 3-minute allows him to optimize that exit for 3.5. He tries this one long, doesn't get it, but doesn't play the reversal. And he was beaten up severely in the coaching session, that after the big gap and a nice big win, this failure to follow through or failure to reverse, that insists that you take that short. And this could have been 10R. But he's also learning to split his attention between 2 different symbols. And the cost of that today was not being able to focus on EWW. So lots of good learning all the way around. This is Brian working. So this is the Kiwi US dollar on the 5-minute. He cuts this one, stops and reverses. It compensates for the loss. He gets this one long and nets 3.6 for the day. His expectancy is 0.75 on the first 46 trades. So he's over 30R on the 5-minute Forex pair. That'll work. And the spot gold versus the US dollar was a 1 hour loss today, but he's also got 0.76 rolling average R. So what he's got here is nice because he's got the gold US dollar pair, and he's also got the Kiwi dollar pair. So they're not correlated, and he's getting daily trades, and his expectancy is 0.75 on a rolling basis, and that's not even getting that trade. So he's in good shape on the 5 minutes down under. This is Kevin. He's got the EWW on the 3 minute. He gets this one, doesn't catch the collapsing dragon on the 3 minute, but his efforts are rewarded on the 30 minute, in which he brings home 4.2. So this was actually a pretty good sample of the kind of day. You know, he gets a micro loss on this one, stops and reverses and crushes this. And this is the case where the slower time frame allowed him to just have one easily managed position. And notice how quickly he's able to get out of that. He doesn't wait for the skin of the dragon. Just the fact that it's, you know, you get the 30-minute bar that made the lowest low, comes back and then makes a 1-2, a higher high. That's enough to get him out instead of waiting for this. This would, if he'd have been on the 3 minutes, you'd see definitely the R10 reversal and the skin of the dragon exit. So you can use a simplified rule of just a 2-bar high. That's like a universal exit for 4.2. Check or hold. All right, that's everything I'm going to show for tonight. I will get the reports worked up and posted. I would highlight that NVIDIA had a combination of good news, announcing some more chips to be that are going to be bigger, better, faster, cheaper than the current chips that are giving them big profits. So that's a news release. And then Bank of America raised their target to 1,500, and they're going to split soon, 10-1. So there's a lot of positivity associated with NVIDIA that's allowing for short-term boosts when the market is sideways, kind of like it was today. NVIDIA had another almost a 5% day as follow through. So your mileage may vary, but let your conscience be your guide. Manage your risk. I'll get the reports posted here shortly. That's everything we got for tonight. And there, for the guys in the coaching workshop, there was some amazing stats being reported from the guys in cohort 2 that are, or I'm sorry, cohort 1 that are doing the 3 minute and the 30 minute and the intraday. Multiple guys are getting a better than 50% win rate that's paying 2-1 with a bunch of different strategies. And if you listen for Juan Carlos's his assessment of the frog box reversals in the morning, the equity curve on that is looking like this. And it is essentially a big gap down that reverses early. And then when the R10 reverses, you put half a frog box or an R5, and you're basically getting the PSAR flip, and you're getting tremendous results intraday with that. So big gap downs that reverse with a PSAR flip, that's basically an SSC. So the SSC after big gaps is paying off like a champion. Supported spring crossing. Yeah, because the way we do that is when the market closes here and then it has a big gap down, we treat that like a big red candle. So the big gap down acts as the harsh winter. And then you get a quick reversal, and you'll see the PSAR is doing this. and the dragon will be like this. And then that morning hook reversal gets you essentially an SSC after the big adverse gap. Well, we love that because the SSC has positive expectancy. The big gap tells you that this thing is going to have large moves intraday, and you have a tight risk box, and you get that reversal that pays off in a hurry. So that's sort of the ideal condition for an SSC after a big adverse gap. And you can just use the standard R10 or R5, or just simply what was the lowest low that the R10 got to, and just use that as your risk box. So you can see that illustrated in his statistics and forward testing, and that has been a robust pattern for years. So that is, if you're in the coaching program, we'll get that posted here later tonight as soon as it's done processing. That's going to be in the cohort 1 video listing. Okay. All right. That's everything for tonight. We'll see you guys tomorrow.